How's it going, everybody? Welcome back. Welcome back to my video series again for the home buying process, home buying ownership. Again, this is just a step-by-step guide on some of the things that I've learned from my experience as a real estate agent here in the Chicago, Illinois market, that you can be able to not only keep for yourself, but also be able to pass on to your family and friends. So, topic that I want to talk about right now. This is probably the number one most important thing that everybody, including myself, when I first started, always overlook when we're trying to calculate how much mortgage can we afford. So once you get your pre-approval, you found out, okay, my pre-approval is 150,000, 200,000, whatever the case may be. Again, everybody's circumstances are different. But now you know what your pre-approval amount is. Now, the first thing that a lot of people do is they'll go right to, whether if they're already working with a real estate agent, or they'll go to Redfin, Zillow, Trulia. And if, let's say, your pre-approval is 150,000, the first thing that they'll do is they'll now type in there, okay, purchase price 150,000 is my max, and they'll search. Now they'll see a whole galore of properties. Oh my God, I love this property. This one looks nice. That one looks nice. And the number one thing that you're forgetting to look at is the property taxes. Now, if you're an individual, whether you're a current client of mine or a future client of mine that's working with my mortgage lender with Loan Depot, then you're already going to have your pre-approval showing your property tax amount. But there are some as well that don't relay that information. So just in case you have a pre-approval that did not show your property tax amount that you're pre-approved for, that is something that you want to make sure that you call that mortgage lender that did your pre-approval and get that verified. The reason why I say get that verified is because, again, I cannot tell you how many times individuals get very excited and say, I want to look at this home in Oak Park. I want to look at this home in Bridgeview. I want to look at this home over in this area, that area, in the real nice areas where the homes are very nice. And I'll mention to them, hey, did you take a look at the property taxes in that area? Well, I can just tell you the property taxes can easily be a difference between an extra $400 to $800 possibly in your mortgage. But we're not going to go just based off what I say. I'm going to pull up right now on my phone. I have a mortgage calculator right here. So just for easy math, and this is just for example's sake, again, don't take this as literal saying that this is going to be the exact purchase price amount, the exact amount for property taxes. I'm just using this as an example. So on my mortgage calculator, I have the purchase price of $150,000, and I'm going to put the down payment of 3.5%. Reason why I put the down payment of 3.5% is because if you have a 620 or higher credit score, then you actually can be qualified and eligible for FHA, a FHA loan, which would allow you to put down as little as 3.5% on your home. So a lot of people think they gotta have that 20%. Actually, you can have just 3.5%. So I'm just gonna put 3.5% as a down payment. So for 3.5% of 150,000, and I'm gonna do the interest rate of about 5%. So again, that's just average. Now, if you have phenomenal credit, it can be lower than that. If you don't have really good credit, then it could be higher than that. But again, just for example's sake, we're just going to put 5%. Term of the loan, 30 years. That's traditional what you're going to have in your term of your loan when you're buying a home. The term of the loan does not mean that you cannot pay it off early. It just means that your mortgage loan amount is based on a 30-year term. And now I'm going to put, just for example, let's say you're getting a property in the city of Chicago. On average, a lot of places in Chicago, the property taxes are probably anywhere between about $200 to $4,500. But again, just for easy math's sake, I'm going to put the property taxes at $4,000 and the annual insurance. Insurance also is what any bank that you get the home through, they're going to require that you get home insurance. On average, home insurance on annually is about $1,100 a year. Well, it said about $1,083, but just for easy math, and I like to round up, I don't like to round down, I'm going to put $1,100. So with all of those numbers, purchase price is $150,000, and I'm repeating this, so I'm hoping that you also can pull up a mortgage calculator on your phone or on your laptop, and you can go through this with me so you can see this for yourself. Purchase price $150,000, down payment 3.5%, interest rate 5%. Term of the loan, 30 years, annual taxes, $4,000, and annual insurance, $1,100. Now, the only other thing that I'm missing on there that would go into it is if you're trying to buy a condo, you're going to have homeowners association fees on there as well. But I'm just talking about just a single family home. But if you are trying to get a condo, you're also going to have home association fees, which you will be able to get that information when you're looking at the property, whether it's on the MLS or whether it's just on the internet for sale by owner. You'll have that information available. So now, that gave me a monthly mortgage payment of $1,202.05. Sounds like, okay, I can afford that. Pretty good. But now, again, let's say you're not paying attention to that property tax amount and you want to get a property, let's say in Oak Park. Well, first of all, if you can get a property in Oak Park for $150,000, please call me immediately because I haven't seen too many unless they're in like a condition where you have to rehab it. But again, just for example's sake, let's say you found a property in the Oak Park area, $150,000, brand new rehab home, you can move right in. But I know for a fact, Oak Park taxes are at least bare minimum, $8,000, $9,000. So I'm just going to put $8,000 now as the property taxes. So now we went from $4,000 property tax to $8,000. Nothing else is changing. We're not changing the down payment amount. We're not changing the terms. We're not changing the annual insurance. We're not changing the purchase price. We're just changing the property taxes alone. Change it to $8,000. Now your monthly mortgage has went from $1,202 to now $1,535. That has now increased your mortgage by $335 per month. So you can imagine how much that's calculated to on an annual basis, 12, 24, 36. That's around about close to $4,000 to $5,000 more that you're paying in your mortgage per year. Now, again, it might not seem like a lot, but depending on your budget, that extra $300 can easily go to a car loan. That $300 can go to paying for your kids' college fund. That $300 can go to gas. That $300 can be a nice weekend with you and the family. Whatever it is that you want to do with that money. So, and now, again, I'm going to keep everything the same. I'm going to do another scenario. The first one was $4,000. That one was $8,000. So now we're just going to say just a difference from $4,000 to just say $5,000. Only a difference of $1,000 in the property taxes. Your mortgage originally at $4,000, again, remember, was $1,202. Now it went from $1,285. So again, not a huge jump as the $8,000, but as you can see, you're almost at an increase of $80, $85 in your monthly mortgage. So if you just add another $200, $300 to the property taxes, you might now automatically be at an extra $100 in your monthly mortgage. So again, didn't want to take up too much of your time, but please, please, please make sure you're paying attention to the property tax amount that you're pre-approved for, because that property tax amount is going to give you a good indicator of where you need to be looking for properties. Now, when you get that pre-approved, that does not mean that it cannot increase or decrease. But again, you just really need to make sure you pay attention to those property taxes, because if you don't, you can be at that closing table and then you see what your monthly mortgage is, and it's a lot more than you anticipated. So again, this isn't just about you getting a house just so you can impress people and you can say, yeah, I got this house on this side of town. This is about getting a house and staying in the house, because I'm not trying to have any clients. You buy a house and I'm not trying to advise you on what you should do to be able to maintain that house, and then 4 or 5 months later your house is up for foreclosure. This is about getting a home as a first-time home buyer or as a reoccurring buyer and maintaining that home. So again, if you have any other questions, feel free to reach out to me on my website, also on my contact information below in this video. Just please just make sure you're paying attention to those property taxes. So until the next video, you all have a wonderful, blessed, and safe day. Thank you.